A very good morning, good afternoon, good evening, good night at whatever time you're watching. This is CA Thofik Tufel and I am your financial management, a strategic financial management faculty. So why are we here today? I know that you all are aware, and if you are not aware, now you will be aware that THARUN'S Brainery is coming up with an exclusive CMA batch. You would have seen the pamphlets. Let me show you. So, we are coming up with a navigator program for CMA final. In this, the objective of today's video is a demo lecture of mine where I will be explaining you how the classes will be, when the classes will be started, what are the timings of the classes, how to purchase these classes, what will be the value additions that you will get, and everything around the course. And also I will be explaining you a concept so that you will be get to know the quality of the class, of the batch, and what you're going to get. Already few videos are posted in this YouTube channel. Just a few weeks back we have posted for CMA final. I have posted two videos. One is complete revision of portfolio management and one is complete revision of investment decisions, and I have received lots of messages that all the students found those video very much helpful before the examination. So thank you very much for that humongous response. I'm very humbled by your responses. Here we are, and this idea of exclusive CMA was brewing from last 8 to 10 months. So myself, Tarun sir and the team, we all sat together and we were planning from a long period of time, and now this idea has come to reality. In the market, for SFM specifically, for CMA students, in the market, they are combining with CA students itself. So, if you want to purchase SFM classes, people will buy the SFM classes what CAs are studying. So, as far as my market knowledge is concerned, I have not seen an exclusive CMA course for SFM. And even if it is there, probably it is there in the Hindi batch, or it will be in any other language batch, but there is no full English batch for CMA final students. So here we are coming up with a complete English batch for CMA final exclusively, and these are the faculties. So Tarun sir will be handling IDT. So all the other faculties you will be able to know in the due course. You have to focus now on SFM. So I will be handling SFM, Strategic Financial Management, and SPMBV, Strategic Performance Management and Business Valuation. Now, this SPMBV is an elective paper that comes under the elective paper, and SFM is the main paper. Both are 100 marks. So I will be covering these two subjects. Sir, you are covering these two subjects, SFM and SPMBV. Yes. Sir, when are the classes starting? The classes are starting from July 10th, okay, or plus or minus 2-3 days. So July 10th we have planned the batch will commence. Okay. Sir, July 10th, what is the subject that will be studied? You will receive a proper schedule in the Telegram group or in the description, or you can put it in the comment box and the team will respond you like which subject, which schedule. You will be getting a detailed schedule in the due course. So the batch is commencing from July 10th if you are enrolling for all subjects. Okay. Sir, what are the timings? Monday to Friday 6:30 to 8:30, and Saturday and Sunday it will be 7 a.m. to 1 a.m. My classes will be in the morning 6:30 to 8:30. Okay, 6:30 to 8:30. So this is without compromising your office timing. 6:30 to 8:30 are the timings, and Saturdays and Sundays alone we will be doing it till the evening. Sure, sir. I know the timings. I know when the batch is starting. Sir, when will your batch will be starting? See, I will be starting in the end of July. Okay, I will be starting, in the last week of July, and then I will be handling Saturday, Sundays, SPM BB, and then SFM I will be handling morning 6:30 to 9:30, and likewise it will go on for 2 or 3 months, three months, and then one more month it will be adding. Okay, sir, this is what, sir, how to purchase? See, I will attach a link in the description. You can purchase the classes. You can even purchase subject wise classes. Sir, I want to attend only your class. You can do that as well. Okay, you can do that as well. Sir, I want to attend all the subjects. So if you attend all the subjects, probably you will get some discount. So if you see all subjects, you will get a discount, and you can call to this number and you can inquire, okay, about all the prices and all, and you can enroll subject wise also. You will get subject wise classes also, and you even have the privilege to you have to take full classes also, and you even have the privilege to take subject wise classes also. Super. Sir, what is the mode, sir? How can I attend the class? See, the mode of classes will be online live. So 6:30 to 8:30, it will be on a live Zoom call. Okay, the same thing that you're seeing in the YouTube, the same thing you will see in Zoom. Not Zoom call means it will not be on tile. So it will be a proper setup, a proper classroom experience you will get in Zoom live. Or if you want, you can even take the recorded classes. Okay, and you can inquire anything about the classes in the given number, and they will be guiding you beautifully. So this was something, because I wanted to announce this personally. Okay, so I came here, and then I will be handling. So this is the demo video for strategic financial management. If you want to see other videos in the same channel, okay, just 1 week ago, you can just search for portfolio management, security analysis and portfolio management. I've put a 2 or 3 hours video. I'll put a 4-hour video for investment decisions, and all these are comprehensive videos that I've put in, but those are revision lectures, and this is a final regular lecture that you're going to experience. Okay, sir. So let me start with my introduction. A lot of people will already know me, and a lot of people will also not know me. So for both of them, first I want to introduce myself. My name is CA Thofik Tufel. I am a practicing chartered accountant, and I am a professor by passion, and I am also a practicing chartered accountant, and that is what is my profession. And I am teaching from past 2.5 years. I am teaching. I am teaching for CA as well as CMA, inter-level as well as the final level. Sir, this strategic financial management subject is an extension of financial management subject that we have studied in the inter-level. At inter-level also I've handled financial management. So those who are my students will be able to relate a lot whatever I'm teaching in strategic financial management. And even those who are seeing the strategic financial management for the first time, you don't worry. My style of teaching is that I will be teaching everything from the basic A, B, C, D. The teaching will be in such a manner that even a layman who is seeing the class from the start will be able to understand and comprehend the information that I'm giving it to them. Now, sir, this subject, strategic financial management, what are all the things that we are going to cover? Okay, so let me just and this class I will be covering from your ICMAI study material. So the study material which is provided by the CMA Institute, paper 14. So we will be using this study material. I know there are a lot of mistakes in study material, but don't worry, we will be correcting those mistakes in the due course, and then we will be solving problems from the workbook again provided by the ICMA Institute, and we will be providing you a concept handbook for SFM where we will be learning all the concepts. So that will be like a guide for your classroom. So for the classroom experience, I will be providing you a concept book where the concepts of all the chapters are written, the problems, the formats. So that will be like a day-to-day book that you have to bring it to the class, and then that will be like a guide for the class. Using that concept book and your ICMA study material and your workbook, these are the three resources that we will be using for this batch. Sir, this batch will be for how many hours? Strategic financial management will be between 120 to 135 hours. So 120 to 130 hours is the duration for strategic financial management. So we will be having elaborative coverage, and even if more hours are needed, that will also be done. I'll be having revision. You will be getting access to the revision sessions also. That will be helpful before the examination. You will be having access for the test series also that you can take before the examination, a full-fledged test. So we will be making you exam ready, and for the purpose of this regular class, I will be making you a subject expert in strategic financial management that you can trust. Sir, how are you so sure? How can you trust you, sir? Either you can see my previous videos, or in my YouTube channel also few videos are there, you can check those, that are for CA inter level. For CA final level, exclusively the content is in only THARUN'S Brainery. You will not find the final content anywhere else. And in Chennai, so if you are from Chennai, you can always ask your colleagues about me, and you will be knowing how the classes will be and how we are going to enjoy the subject. Studying the subject is one part, understanding the subject is other part, and writing the paper is a separate, it's an entire different ball game. And we are going to master all these three. Strategic financial management. Are you all ready? Yes. Okay. So let me just give you a small. First is KYS. So what is KYS? Know your syllabus. First, you should be knowing what is there in your syllabus. I already told you, strategic financial management is an extension of what you have studied at your intermediate level as financial management. Sir, inter-level, sir, we all forgot everything, sir. Don't worry. Okay, don't at all worry. This chapter, investment decisions, you would have studied at inter-level. Sir, it is there in final level also. Yes. See, chapters will not leave you. Even at the final level, it is there. And once you clear your final, you become a CMA. When you are going into the real life, again, you are the person who are going to take investment decision. So concept will never leave you. It will be sticked with you like a Fevicol. It will never leave you. Are you all with me? Okay. Sir, KYS, know your syllabus. We have 5 sections in SFM. Section A is investment decisions, that has 25% weightage, 25 marks it covers for. Okay. The first is investment decisions. The second one is security analysis and portfolio management. Sir, all these words are alien to me. I am not able to understand. Don't worry. Okay. Don't at all worry. No, this is just a formality starting. No, I have to at least tell, okay, that these are the chapter names. If you don't know, when we go inside, you will be knowing everything. So don't at all worry. If you don't know what is portfolio, if you don't know what is security, okay, don't worry. Everything will be understanding. Sir, see, financial risk management. Big names. But don't worry, okay, it is all will be decoded in a manner that you have never learned or never experienced. That is my promise. And in SFM, you will be having lot of formulas, correct? A lot of formulas. People and all will be having formula book and all, some 40-50 pages, where all the formulas of SFM are written. I will make you one commitment. Are you all ready? The commitment is that in this class, you are not going to mug up even a single formula. Not even one formula I will ask you to memorize. Sir, how sir? Then how will I write in the examination? You will understand all the formula. You will understand in such a manner that you will not even need to mug up the formula, and we are not able to, and we will not be, I will not be asking you to memorize this formula. Okay, this is the formula. Okay, write this formula. CAPM K is equal to RF plus beta into RM minus RF. You would have studied at inter level, but 90% of the students will not understand the CAPM formula. I'm sure. Sir, other 10% is my students. Ayo. So you can, okay, so other 10% will know. At the inter level itself, I have given very much clarity about CAPM. Again, at a final level, I will be giving the same clarity. Okay. So everything will be in a conceptual manner, in an understandable manner, in a slow and steady pace, with exam oriented approach, so that you will even understand the subject and you will even strategize it to write it in the examination, because that is also very much important. So investment decisions, 25 marks, security analysis and portfolio management, 35 marks, financial risk management, 20 marks, international financial management, 15 marks, and digital finance, 5 marks. Sir, from where are you telling, sir? This is from your study material. If you open your study material and see, I know very rarely you do, but if you open your study material and see, you will see these things. Okay. Now, which means this is the 100 mark weightage. So if you see, the section A and B itself covers 60% of the weightage. Sir, if A and B parcha, I am passing, you will be passing. Okay. But why you want to take so much of risk? If you know how to manage your risk. Are you all with me? It's a regular class where I will be covering each and every concept and each and every topic that is there in your study material, and also that is not there in your study material. And in the end, okay, in starting, if I tell you, you will leave. In the end, I will tell you how to strategize your preparation so that you cover 100% weightage with the least, this much itself you study, and then you will be able to write 100% of the paper. That I am going to tell you when we come towards the end. When the preparation level starts, I will be telling you these things also. Because now itself, if I tell leave this, leave that and all, or it not required, if I tell like that, you will not even be concentrating in the class. So I will not be telling you now. For now, everything we are studying for knowledge. Gain knowledge, create a base, and afterwards we will be strategizing our knowledge in order to write the examination to score highest mark. My target is that each and every student who is watching this class should get an exemption. Sir, what is an exemption? 60 plus marks. For me, if you get 60 plus marks, you are getting exemption. If you want to target 60 plus, if you want to get 60 plus, you have to target 80 plus marks. Sir, impossible. No. You have to target 80 plus marks. Only then you will be getting 60 plus marks. That is how I think. Okay, you think whatever you want. You guys are more intelligent. Okay. But my thinking is that target for 80 plus marks, you will be getting 101%, you will be getting 60 plus marks. If you are not getting 60 plus marks, you come to me, I will be refund all your money. Sir, I will. Okay, myself personally, you want to target for 80 plus, study properly. Okay, whatever is given to you, 101% you will get 60 plus marks. And take it from me, trust me, getting 60 plus mark is not very difficult in this paper. It's not very difficult provided you understand the concept and then strategize and study. So that is what is our plan. Okay, sir. Investment decision you have studied from CA Inter. Same CA Inter concepts are also there, plus some extra concepts are also there in investment decision. So risk analysis and capital budgeting is there, which was not there at Inter level. So we have, few more bifurcations of investment decisions also. Security analysis and portfolio management. Again, this was there at CA Inter level, very basic things were there. Again, this has been extended. Financial risk management is nothing but derivatives. How you want to manage your risk. So through derivatives, you can manage your risk. Forward contracts, option contracts, swaps, and all these things are there in financial risk management. So international risk management, this is nothing but foreign exchange. If you are dealing only in India, you only have INR. But what if I have USD? I have, dirhams, I have real, okay, I have peso. So what I have to handle, okay, pounds, euros, then how I can handle. So how I have to, translate the foreign currency risk. So all these things are covered in international financial management. So this is basically nothing but investment decisions for, foreign branches and all these things. So these things are also covered in international financial management. And this is an emerging area which is covering 5 marks, which is digital finance. A lot of people will leave digital finance. What's the strategy? Definitely you will get 5 marks. 101% you will get 5 marks. And there are only limited number of questions in digital finance. A very small topic. 101% you will get 5 marks. So why you want to leave free 5 marks and all? Correct? Though the topic doesn't seem interesting to you, doesn't mean that it will not be, getting you marks. Okay, sir. Now, though in the starting we will not be focusing on examination, but since this is the first class, you should know the rules of the game. So I am just explaining you the rules of the game. So that will be there at the back of your mind. What should be your strategy and how you have to study. Okay. But we will not be focusing on examination for the next, 50, 60, 70 hours. Afterwards only I will be telling you all the examination things. First we will be 100% going for conceptual. With examination oriented at the back of the mind. So the back of the mind seed I am imbibing here. Sir, you have 2 sections in the examination. First is the MCQ section. That is covering for 30 marks. Above, which means you have 30% MCQ and then you have 70% of descriptive. Okay, descriptive means you don't have any options. You have to write it down. Question answer. So the first part is MCQ format and the second one is Q&A format. MCQ, you will be getting 15 questions of 2 marks each. So 30 marks MCQ. So 15 questions of 2 marks each, 30 marks. Sir, will I be having any negative marking? No. No negative marking. Okay. In CA foundation level and all, or you take any other MCQ examination, mostly MCQ examinations will be having negative marking, but here you are not having any negative marking. So wrong 0, correct 2 mark. So that is how it is the scoring system. Sir, up 30 marks MCQ, and then section B, you have 5 questions into 14 marks. So I will be having 5 questions. Each question will be 14 marks. And that will cover 70 marks. So this is what is a total 100 marks paper. Okay, so 30 marks MCQs and then 70 marks for descriptive. Sir, how these 5 questions will be? You will be getting 7 questions and you have to select 5 out of those 7 questions. See, you are having very good choice here. 2 questions you can leave in choice. What a good opportunity you are having. Okay, so here you have to use the strategies and all. Okay. Appo, sir, 5 out of 7 questions, sir, which means I can leave some chapters and all. People will be thinking, no, if I leave some chapters, what if that comes here, there? Okay. The pattern of the questions is also, okay, you can also predict the pattern of the questions. That is how CMA papers are being. See, in CA, you have only one choice. You can leave only one question in choice. but in CMA you can leave 2 questions in choice. So that is a very, a good and a very advantage for you, that will be helpful for your strategy. Sir, which means question number 1 is MCQ and question number 2 to 8 will be the question and answers. And the question number 2 to 8 alone I have written here 2, 3, 4, 5, 6, 7, 8. These are the 8 questions that you will be getting. Now 90% of the time this prediction works. So I'm giving you now itself. Question number 1 will always be investment decisions. It will be either a 14 mark problem or 2 into 7 mark problem. Okay, but it will always be investment decision problem only. Either one 14 mark problem or 2 into 7 mark problem for question number 2. At CA, first question is always compulsory. You know it or not, you have to attend. Here it is not like that. Even first question also you can leave in choice. I'm just telling you, okay, people who study CA will be having this comparative things and all, right? So for that I'm telling you that also. Question number 3 will be risky proposal, is again investment decision only. See, investment decision have 4 parts. One is investment decision, project planning and control. So this is nothing but basic investment decision and the evaluation techniques, payback period, NPV, IRR, all these things you know. Even if you don't know, don't worry, we will be covering. Evaluation of risky proposals. If risk is there in investment decision, how to handle that? Okay, here you will have scenario analysis, risk adjusted discounting rate, and certainty equivalent approach. A lot of approaches are there. And the third one you have leasing decisions, and the fourth one you have securitization. Now this mostly will be first question, or sometimes okay this and this 7 marks, so whatever be the case, but it will be from investment decision. The second question will be mostly, it will be into 2 into 7. From here it is mostly 2 into 7 marks. The first only it will be 14 mark, or sometimes here also they will put 7 into 2, but mostly it will be 14 marks. Rarely it will be 7 into 2, the second question, and all other questions are 7 into 2, 14 marks, which means the question will be having 2 sections, section A and section B, part A and part B. 8 alone will be having 3 parts, 5 plus 5 plus 4. Okay, sir, concentrate now. A very important thing I am going to tell you. If you know this, you will be able to strategize it, but all this strategy I will be discussing at the end. But since this is the first class, formality purpose I am telling you, so that you should be knowing that how you are going to write the examination. Second question mostly will be investment decision. Third question mostly will be risky proposal and leasing. Fourth will be always security analysis, mostly 95% is the prediction rate. Okay, don't tell, if something doesn't come, you don't come and scold me. 95% is prediction. Fifth question portfolio management always. Sixth question derivatives always. Seventh question forex, which means international financial management always. And eighth question is always a theory question. Always a theory question. And here the first part will be digital finance, which will be from here. The first part will be from digital finance, 5 marks. The second part will be from securitization, here 5 mark. And the third part will be from international financial management, here the IFM environment. From here it will be 5 marks or 4 marks. So 5 plus 5 plus 4. This is the 14 mark problem for the 8th question. Lot of people will leave theory. My strategy is that why you should leave theory when you can get 14 marks sure shot, knowing the 3 concepts, and only 2 to 2 to 3 pages you have to study for each concept. Then why not? Why not score that 14 marks? Understanding, because very easily you can score 14 marks. See, theory I know that okay, well, even if you write fully you will not get 1 or 2 marks, but yeah, from your 14 at least you can target 12, 11. You can do all these things, and very predictable questions are there. So this is what is a pattern. Not all the people will tell you this pattern and all, correct? But I am telling you the predictions of the questions, and this is how the questions are framed. You check last 10 or 20 attempts question paper, I have already checked, and from there only I am giving you these things. And this is based out of new syllabus 2022. Okay, this is not the old 2016 syllabus, new syllabus 2022. Clarity, I hope you are getting some clarity. I'm just giving you a, an overall perspective of the the questions. Okay, sir. So section A, section B, section C, and section D and section E. And these are all the inside topics. In investment decision, what you're going to learn, you will be going to learn the cash flows, how to discount, NPV, IRR, how will the conflict will be, okay, unequal life is one conflict, and MIRR and MNPV, lot of things are there that you're going to study here. Evaluation of risky proposals, scenario analysis, sensitivity analysis, decision tree analysis, okay, expected NPV, expected standard deviation, all these things you're going to see. Then leasing decision, okay, should I lease or should I not lease, okay, so all these things, or should I buy, so these are all the things. And break even lease calculation, break even rate calculation, all these things. And securitization is a theory topic. Then security analysis, like you're having equity valuation, you're having bond valuation, you're having mutual funds, you're having portfolio theories, you're having asset pricing theories, you're having portfolio evaluation and efficient market hypothesis. Again, here a theory mark question is possible, but rarely asked, but it is also possible. Then you have financial risk management. Here derivatives are asked. So derivatives, you're having options, okay, you're having put call parity, you're having swaps, and then you're having interest rate derivatives. So here the content is lot of content is there. Weightage wise it is less. Okay. Then you have international financial management, okay, where you are having all the foreign exchange, equilibrium rate, indirect code, direct code, all these things are there. And then currency options, currency forward, currency swaps, all these things are covered here. Then you are having digital finance. Again, digital, okay, in the era of digital, how the finance has transformed its shape. So that is what we are going to cover here in digital finance. Here it's a 5-mark weightage. Okay. At the inter level, you have already studied what is financial management and what are all the things are there. Just I want to brush. Okay, every when you're waking up, what you will do? You will brush it. Why? You want to refresh. So here we are brushing the small things so that you come into the flow that you're going to study strategic financial management. Sir, what is financial management? Breaking into two terms. One is finance and one is management. What is finance? Basically, finance is money. Are you all with me? Finance is money. Sir, what is management? Basically, you have heard the word of manager. Manager, if you're working, you'll be having some manager. What is the work of the manager? The work of the manager is to make others do work. So manager is the person who make others work. Sir, what the manager does, sir? He make others work. Sir, okay, sir, the other people will work, but what the manager will do? He make others work. Sir, you're telling again and again the same thing. A manager is a person who takes decisions. So, a manager will be getting more money. It means that money is not for doing the work. Money is for taking the decisions. Sir, you're giving us so much big insight. Yes, it's a very big and practical insight that you will be paid for making decisions and you will not be paid for doing the work. Let me tell you, doing the work anyone can do. Sir, see, if I teach someone how to prepare financial statements, even a BCom student, if I teach some 10 or 15 financial statements he can make, then he can make financial statements on his own. If I teach how to do the audit, he will do all the audits and all. What is it that only you professionals can do are to take decisions. The bigger decisions you take, the more money you get. Are you all with me? Understanding this? So in this subject, strategic financial management, our core area of focus will be to take decisions, because take it from me, taking decisions is not an easy task. It requires high level of skill, high level of expertise, and it will be a lot of pressure when you take big decisions, because if something goes for a toss, the company will be gone. or if something goes for a toss, your job will go. Something goes for a toss, thousands and lakhs and crores of money can go. So taking decision is very crucial, and that is your role, and that is what you're going to study in strategic financial management. I hope I'm creating a framework of how to think in strategic financial management. You're not doing the calculations, you're not learning how to calculate K, you're not learning how to calculate KD. You are learning you're not learning how to value equity shares. After valuation, what you should be doing, how to take a decision, that is something that you're learning. Because anyone can value the share. After valuing the share, you're taking a decision to buy or sell. That will translate your skill and knowledge into money. Okay, sir. So basically, if you see management, okay, manager, what he will do? Planning, organizing, directing, controlling. Okay, that is what is the work. He will plan, he will organize, he will direct, he will control. How? Effectively and efficiently. Correct. So basically, then what is financial management? A person, a financial manager is a person who plan, organize, direct and control money that could be used effectively and efficiently inside the business. This is what is the meaning of financial management. Sir, financial management is a managerial activity. It is a managerial activity. There will be a person who is a manager who will be doing the financial management activities. So it's a managerial activity which is concerned with planning, organizing, directing and control. Same thing, okay, PODC. Planning, organizing, directing and control the firm's financial resources, which means money. Money or alternative word, financial resources. Basically, I'm telling you in a layman terms. Sir, what is financial management? Finance means money, panam. Manage means to manage. So how to manage money is what's its financial management. So it's a managerial activity which is concerned with planning, organizing, directing, controlling firms' financial resources or financial activities. Now these things are not there in your study material. From where you are teaching, sir? You would have studied this in intermediate level. I'm just creating a base. On that base, I will be keeping this SFM. Okay. And we will be transitioning from intermediate to SFM, final level. I will not be directly telling you, okay, let us start risk return, portfolio management, blah, blah. You will be running from the class. Now, sir, so this financial management, so basically finance has a lot of branches. One is corporate finance, which means what, sir? Financial management for corporates, for companies you're doing. Second one is personal finance, financial management for individuals. For me and you are doing financial management, that is called as personal finance. Sir, public finance, financial management for governments. Okay, so government is preparing a budget, government is collecting all the time, all this comes under public finance, financial management for governments. Next, investment finance, or it is also called as core finance. So basically, now this is something that is emerged from the 19th century end. Which means what, sir? Investment finance means equity valuation, bond valuation, security analysis, portfolio valuation, all these things. Basically capital market decisions. So capital market pricing, capital market valuation, capital market decisions. So decisions related to investment in capital markets comes under investment finance, and that is the core finance. And then we have international finance. Okay. So financial management across the borders, if across the border transactions are there, that comes under international financial management. Okay, so that is covered here. Why this is important? Because let's say in India, the interest rate to take a loan, okay, the interest rate to take a loan is 18%, whereas in US the interest rate to take a loan is 5%. Then what you will be telling, sir, here if I borrow money I have to pay 14%, there if I want to borrow money I have to pay 5%. So sir, I will borrow money from US and I will use it in India. You will think like that. Correct? But what will happen here is that there is something called as foreign conversion also. So here, so $1 is equal to, let us say, 80 rupees. So first what you will do? First you will go there. Correct? You will apply for a loan. Let's say you're applying for $1 lakh for a loan. After you're applying for the loan of $1 lakh, you're coming here and you're transferring the money here, $1 lakh. Now in Indian currency, it is becoming 80 lakh rupees. Correct? It is becoming 80 lakh rupees. So I'm just giving you a small example so you can understand international financial management, why it is important. Let us say the interest rate in India for a loan is 18%. Okay, wow. So that is a loan. In India, if you take a loan, okay, let's say from TB Bank. Sir, what is TB Bank, sir? THARUN'S Brainery Bank. If in India, okay, it is 18%. In US, if you want to take a loan, it is for 5%. That is TT Bank. Sir, what is TT Bank, sir? Thofik Tufel Bank. Okay. Now you all will be thinking, sir, now I need some money for business, for investment decision, I need some money. Sir, from where will I source the money? You will tell, sir, if we are sourcing from US, I have to pay only 5% interest. If I am sourcing from India, I have to pay 18% interest. So, sir, I will source it from US. You will tell like this. Correct. But just taking a decision on a prima facie level, it is not correct. You have to first understand what is happening or why this concept of international financial management is here. So, let's say you are taking a decision of taking the loan in US. You are taking a loan in US. Let's say you are taking $100,000 at 5%, okay, from TT Bank has given you this loan. But you need the money in India. Then what you will do? You will transfer this $1 lakh at 80 rupees per dollar. Correct? That is what is the conversion rate. Let's say for an example. So which means how much you will get? You will get rupees 80 lakhs in India. Correct? Now let's say after 1 year, you have to repay. Okay, let's say after 1 year, you have to repay. Now how much you have to repay? 5%. Let's say only interest repayment for now. Okay, wow. So you have to repay with interest. Sir, how much I will repay, sir? 1,05,000. Why, sir? 1 lakh is the principal amount that I will repay. And then 1 lakh into 5% is 5,000. So 1,05,000 you are going to repay dollars. But you don't have dollars, you have rupee. So what you will do? You will convert a rupee into dollars. Correct? So how much rupee you have to give to get at $1,05,000? Let's say after 1 year it is 85 rupees. Let us say after 1 year it is 85 rupees. So if it is 85 rupees, you are repaying. So what is 1,05,000 into 85? Get me the calculator. Wait a minute. Okay, sir. So how much you are repaying? 1,05,000 into 85 rupees. You are repaying 89,25,000. This is the amount that you are repaying if you are taking the loan in US dollar. Had you taken the Indian loan? Had you taken the Indian loan? How much loan you have taken? 80 lakh rupees. So had you taken 80 lakh rupees at 18% interest, how much you are going to repay? First you are going to repay 80 lakh plus 80 lakh into 18% interest comes to 14 lakh 40,000. So you are going to repay, okay, 80 lakh plus 18%, that comes to 94 lakh 40,000. So the dollar is cheaper. Correct? But had it been 90 rupees, okay, had it been 90 rupees, your repayment will be 94 lakh 50,000 rupees. So here Indian will be better. Though you are paying only 5%, but you are losing in the foreign exchange loss, because you took the loan at 80 rupees per dollar. You are repaying it at 90 rupees per dollar. So 10 rupees per dollar is the loss. Correct? Huh? Your liability amount is increasing, it is loss. But your asset amount is increasing, it is a profit. Are you all with me? Of course, sir. That is where now international financial management also comes into play. Now, because of this cross-border different interest rate and cross-border different exchange rates, decision making thinking will also change. So that's where the international financial management topic have been evolved. Now these are modern finances, okay, that are not there in your study material, but these are also branches of finance that have been emerged now only. One is called as behavioral finance. So what is behavioral finance? That talks about how behavior changes the financial management decisions. For example, a person is risk averse person, how he will take a decision. A person is not a risk averse person, how he will take a decision. Okay, ba? So in an inflationary situation, how decisions are being taken. So behavioral finance. So human behavior is linked with financial management. This is a new branch that has been evolved, which is behavioral finance. Sir, I want to study these and also from where I should study, sir. So after SFM, okay, after this studying at the final level, you have to study CFA. Sir, CMA or CA, SFM is a subject, and under SFM we are having chapters: investment decision, security analysis, portfolio management, international financial management, okay, quantitative finance. So quantitative finance is not there, okay, and you are having these things as different chapters. Now CFA is like a specialization in finance. How after doing MBBS you do specialization in bones, you do specialization in ENT, you do specialization in eyes, you do specialization in heart. Adhe mari CFA is a course where you do specialization in finance. In CFA, all the subjects are financial management only. Investment decision, here it's a chapter, there is a subject. Security analysis, here it's a chapter, there security analysis is a subject. Portfolio management, here it is a chapter, there portfolio management is a subject. 100 mark subject portfolio management, 100 mark subject security analysis, 100 mark subject international financial management. There you are going to study all this behavioral finance, quantitative finance, and all these things, all the branches of finance. So specialization. So I am just creating a ignition. If you are interested, okay, you can study these things also. Just like this is also a part of finance. So I will not be teaching you only from the study material. I will be linking the study material with practical examples, the practical life, what is going on, and also connect it with the practical things. So you will be able to transform the knowledge that you are learning into practical life. And this is the most practical subject from all the other subjects. Sir, why are you telling like that? Because this is a subject today you study, tomorrow you can apply. Today if I teach you calculation of beta, tomorrow you can download the Excel sheet of different prices of different stocks, and then you can calculate the beta, and then you can calculate the correlation, and then you can take a decision today itself. Today itself you can take a decision. But this is the most practical subject. Sir, what is the meaning of practical subject? Numbers or calculations are no. Practical subject means the subject that could be used in practice. Sir, yes. The subject that could be used in practice. That could be used practically is a practical subject. And this is the most practical subject. Why? Because whatever you are studying today, tomorrow you can apply. Okay, so you have this, these are modern finances, okay, behavioral finance. Quantitative finance means finance using statistical models. So finance using computing models. So where big data numbers are there quantitative finance is used. Basically in stock market data and all, you are having 40 years of data, 50 years of data, daily data, minute level data, second level data. So where quantitative finance is used, quants basically. Okay, where hedge funds will be mostly using quantitative finance because daily they will be making millions of trades. So there all the statistical and mathematical models are used. Theoretical models are not used. Okay, so these are the finance. Sir, what are the core concepts of finance? And all these you have already discussed at an intermediate level. Time value of money. Core concepts of finance. Risk and return. What is risk? What is return? Cost of capital. Capital budgeting. Capital structure. Dividend policy. Working capital management and financial analysis and planning. Sir, time value of money. is the heart of financial management, because all the concepts emerged from time value of money only. Time value of money tells that today's money is not equal to tomorrow's money. Today's money is not equal to yesterday's money. The value of money changes because of time is time value of money. And you have reasons for that. Risk is one reason, inflation is one reason, interest rate is one reason. So because of these reasons, the difference in value because of time gap is called as time value of money. Basically, that talks about compounding and discounting power. Okay, that you already studied at a foundation level also, and you have already studied at an inter level also. Okay, so that is the reason time value of money will not be covered in the final level. But don't worry, if you want to understand time value of money also, you tell me, I will give you the video of time value of money. You see, as a self-paced module. Okay, others will be live, time value of money will be self-paced module. Self-paced you learn. Correct? I will only be teaching. It's not that someone else is teaching. Risk return. What is risk? What is return? All these calculations. Cost of capital. Sir, you are having different types of capital: equity, debt, preference, debentures, convertible debentures, blah 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 blah. What is the cost of those capital and how to calculate that? Nothing but KE, KD, KP, KL. So these things are covered here. Cost of capital. Capital budgeting. It's nothing but investment decision. Capital budgeting. Long-term decisions are called as capital budgeting decisions. Capital structure. Sir, how should I structure my finances? Should I keep only equity? Should I keep only debt? Should I keep a mix of equity and debt? Where leverage chapter will come, EVA, TPS, MPS analysis will come, okay, and theoretical concepts like Modigliani, Miller, and a net income approach, net operating income approach, all these things are covered in capital structure. Now, next is dividend policy. Sir, what should be the dividend policy of the firm? Should I pay dividend? Should I not pay dividend? How much dividend should I pay? If I pay dividend, what will be my price? If I don't pay dividend, what will be my price? So, all these are covered in dividend policy. You're having Walters model, Gordon's model, Miller, like Walters model, Gordon's model, Graham and Dodd model, Linter's model, all these models are there that we have discussed in dividend policy. When should we give dividend? Okay, when R is more than K, you should not give dividend. When R is less than K, you should give 100% dividend. All these things we discussed on the intermediate level, the dividend policy. Next, we have working capital management. Sir, how to estimate my working capital using the operating cycle method? So you will have operating cycle. Operating cycle is equal to raw material holding period plus WIP holding period plus finished good holding period plus debtor collection period minus creditor payment period. Sir, whatever you are telling, I don't understand. Sir, don't worry. All these are inter-level concept, not there at the final level. But I'm just telling you, these are something that you studied at inter-level. That was focused on corporate finance. All these things are focused on decision making for corporates. The good news is that at final level, the main focus is not corporate finance. The main focus is core finance. Sir, very good. So you don't have this dividend policy, you don't have working capital management, you don't have financial analysis planning, you don't have capital structure, you don't have cost of capital. All these things you don't have. You have you have investment finance, you have core finance. Okay. At intermediate level, and also financial planning analysis, ratio analysis, okay, ratio analysis, trend analysis, and all these analysis things we learned. Intermediate level, what we did? Introduction to all the concepts. I've introduced all these concepts to you, and understanding the logic and all the calculations. Understanding the logic of everything. What capital structure, why, what, everything we have understood at that intermediate level. And the calculations. At the final level, what we are going to do? We will apply all the concepts to take strategic business decision. That's the reason the subject is strategic financial management. Using financial management to take strategic business decisions is what strategic financial management. So that is how you are transitioning from intermediate to final level. So now your maturity level is much higher. Are you all with me? Okay, if you all are with me, give a like, a thumbs up to this video, and write a comment. Yes, sir, I am with you. Hey, do it now, so that I will also be getting to know, right? I will be seeing that how many people have really watched, not by seeing the views, by seeing the comments. I will be getting to know, right? See, come on, type it. Hey, you're not typing, I know that. Type it now. Pause pannu. Hey. Now, and connecting the theories with real life scenarios to understand the application of concepts practically. This is something that you're going to see at a level. Like examples, Zomato is having negative earning, but still the share price is increasing. Why? You know, interestingly, there is a valuation guru whose name is Ashwath Damodaran. Few people will know, few people will not know, or you can search in the internet, in the Google, in YouTube. He is a professor for financial management, not in India, he is in, I think, US. Okay, his name is Ashwath Damodaran. He is from India only, he is an Indian, but now he is US, and he is known as a valuation guru. There is no better professor or a better, explainer of financial management, corporate finance especially, in the world of finance. He predicted, based on his valuation theories, that the Zomato share price should be at some level, and it will be trading 2x of that level. It was trading 2x at that level. People were criticizing that Ashwath Damodaran's valuation is not correct. Coincidentally, fortunately or unfortunately, whatever you say, after a few months, the share price fall down, and then it reached the level where Ashwath Damodaran was predicting. Time forward, now it is not at that price, now it has increased more to that level also. But what we are going to understand is that you guys have learned in intermediate that more profit, more will be the wealth of the shareholders, more will be the share price. If profit is increasing, share price is increasing, why negative earnings is also increasing the share price? It is a case study that we are going to see. Now, Apple is having a lot of cash reserves. How it reflects the working capital efficiency? It is again a different case study that we are going to see in the upcoming thing. So the concepts that we studied at an intermediate level will be applied practically here at the final level. We will be seeing a capital structure case, how Reliance Industries bonds issuance changed their capital structure. And then we are going to see a dividend policy with an example of Vedanta's dividend history. How Vedanta is paying. Vedanta is a company that pays high dividend. Infosys is a company that pays a lot of dividend. Correct? So how the dividend policy is affecting the wealth of the shareholders. All these things are the concepts of intermediate level that you could apply at a final level. But all these are corporate finance. Okay, all these are corporate finance. Sir, how you are transitioning from intermediate to final level? At intermediate level, you are more focusing on corporate finance, which means financial management decisions for business. Basically, only three things were covered: financing decisions, investment decisions, and dividend decisions. At a final level, my dear Chalakutis, you all will be more focused in investment finance, or it is also called as core finance. Okay, investment finance, or it is also called as core finance. I hope you all are with me. Okay, so sir, what are the core finance concepts, sir? Equity valuation, bond valuation, derivatives market, risk management, portfolio management, international financial management. All these topics comes under the investment finance. Investment finances are equity valuation. Equity is an investment instrument, how to value my equity. Bond is a financial instrument, how to value. Derivatives again a financial instrument, how to value. Risk management, okay, if I'm making some investment, how to manage my risk. Portfolio management, if there is only one equity, it is okay. But if I'm having a mix of equity, debt and all these things, how I have to manage my entire portfolio. International financial management, sir, foreign assets also I'm having, how to manage that. All this comes under core finance, and that is what is the major focus of final level. What and all we are going to do in the upcoming sessions. Let's say that you are studying equity valuation. You are having a formula of CAPM is equal to risk-free rate plus beta into RM minus RF. You know beta means sensitivity of the stock. That is what you study at an inter level. Hey, in this class, I am not assuming that you Okay, know everything. I'll be starting everything from the basic. But let me take an assumption. You know what is beta. Beta will always be given at an interlevel. So beta is the sensitivity of the stock. If my beta is 1.5 times, it means if my market is increasing by 10, my share will be increasing by 15. That is how my beta is 1.5 times, 10 percentage. So if my market increase by 10 percentage, my share will increase by 15 percentage. If my market decrease by 10 percentage, my share will decrease by 15 percentage. It means my share is 1.5 times sensitive than market. So that sensitivity is calculated using beta. Just an example. Now, sir, how to calculate beta? We have a separate formula for that. To understand beta, you should know what is covariance. To understand covariance, you should know what is correlation. To understand correlation, you should be knowing how the stock prices are moving. So all these things through number also we will be discussing. And practically, I will open the Excel sheet. I will open the real share price. Let's say real share price of Reliance Limited. I will actually calculate the beta of Reliance Limited in the classroom, and then I will give you homework to calculate beta for other stocks. Say let's say MRF, or let's say Tata Consultancy Services, TCS, or let's say Infosys. I will ask you to calculate beta in the regular classes, and only then practically you will be knowing that how the shares are sensitive into the market. So these things you're going to understand: asset beta, equity beta, debt beta. Lot of things you'll be understand. So practically we are going to see. Practically I will tell you, okay, whether the share price is undervalued or overvalued. Hey, I'm not going to give you any, investment advices and all. Okay, I'm not a SEBI registered research analyst. Though I'm writing the exam, I will be becoming a SEBI registered analyst soon. But till now, I'm not that. So, it's a disclaimer that I will not give you investment recommendations and all. But I'm going to give you knowledge base of how to apply the concepts so that you can take the investment decisions by yourself. That is what we are going to see, and that too practically. Okay, I will be investing some time to teach you practically also. Because ultimately, what is it going to help you is not the marks of CMA final. That is important for a short period of time. But what stick to you for a long period of time is the concept. So I am that very quick, or I am the adhesive that is helping you to stick the concept to you. So I am working in that manner. I am that spark that will ignite the curiosities and questions that will be arising from the concepts that you are studying. See, basically I believe that a teacher is just a spark. Now from that spark, people who are having ignition will take that spark and they will burn the fire within themselves and ask questions, and then they will move ahead. So what is important from your side is to have that ignition. Okay, wow. I know that you guys are students, young, you are having a lot of gas inside you. So one spark is needed to ignite that gas into fire. That role is being done by the classes. Okay. And then investment decision that you studied at the inter-level, right? That is continued here with whatever you studied at inter-level plus some advanced concepts also are being covered here. So inter-level continuation is there only for investment decisions. All others are the core finance concepts. So it is focused on core finance. See, I'm just telling you the transition from intermediate to final level. That is what we are going to see at this level. Okay. Now, sir, let me just give you some introduction to investment decision, and then slowly we are going to pick up the pace for investment decision concepts. Sir, investment decision, it is also called as capital budgeting decisions. So what is capital budgeting decisions? Evaluation of long-term investment proposals or long-term projects. I have to evaluate. So if I'm having some project proposal in front of you, I have to evaluate. So that evaluation is called as capital budgeting. That evaluation is called as investment decision. See, any concept for that matter, you should be understanding what, you should be understanding why, and then you should be understanding how. if you know or if you have the answer for these 3 questions, any concept for that matter, it will be able to retain in your brain for a longer period of time. Now, if you are studying something, what is derivatives? Why we are having derivatives in the first place? And how to calculate whatever other things, how derivatives work, how to calculate the derivatives, market, all these things. So, how is the calculation part? A lot of people will directly jump to how. Capital budgeting techniques, payback period, accounting rate of return, payback reciprocal, discounted payback period, net present value, profitability index, IRR, modified NPV, adjusted NPV, all these things you are going to see in the capital budgeting techniques. And let me tell you a secret, all these things you already studied at an inter level. Sir, already studied at an inter level. I will be teaching you the advanced things here, but don't worry, whatever you studied at an inter level, I am again going to teach you all these things in the classroom. Only then that will be helpful for the base building for the next coming concepts. Investment decision is a very important thing, so that's the reason I will be taking all these things in a good manner so that you will be understanding all the concepts. Okay, so first, what is investment decisions? Capital budgeting decisions, where you are having evaluation of long-term investments to determine whether they are financially viable or not. That is what is a decision, right? I have to determine, are they financially viable or not? If they are financially viable, I will take a decision. If they are not financially viable, I will not take a decision. Whether it is adding value to a business or not, it doesn't mean, okay, you are having a sari factory. It doesn't mean you will take an investment decision to put your entire money in the, in a petrol bunk. That is not aligning with your strategic goals or objectives, correct? So that will align to your strategic goals or just, strategic goals. That's what is, the purpose of investment decision. By applying evaluation techniques. Sir, how to take a decision? By applying evaluation techniques, which is also called as capital budgeting techniques. Sir, why are we studying investment decision in the first place? Why this concept is there? First, because investment decision involves huge cash outlay. It involves huge cash outlay. Are you all with me? Why? Because you are not taking a small investment decision. You are going outside. Should I purchase this 5 rupee chips packet or not? Should I purchase red lace or green lace? Now this is also an investment decision, but it doesn't include huge cash flow. So you will take a decision in 1 second or 2 seconds, maximum 5 seconds. Okay, you will not sit beside the shop, do the calculations, and then you will take the decision. But at the same time, if you want to take a decision, should I purchase Tata this or Swift Desire? Correct? Now that is an investment decision that requires huge cash outlay. So that requires huge cash outlay. So there you are going to take some time. You are going to do some calculations. Okay, you are going to do some calculations, and based on these calculations only, you are going to take the decisions. Are you all with me? So why investment decision is important? Because it involves huge cash outlay. It involves huge cash outlay. I hope you guys are with me. It involves huge cash outlay. Second one, it is an irreversible decision. Sir, why are you telling like that? It is an irreversible decision. Because once a decision is taken, it cannot be reversed. Correct? Let's say Swift Desire car. You have decided that I will purchase Swift Desire car. You purchased, you sat in the car. One day you are driving. Second day you are telling, your seat is not nice. I don't want this car. Is it possible? Not possible. Once a decision taken is taken, it is irreversible. So because it is irreversible, it is important for you to take the decision properly. Correct. So it is an irreversible decision, cannot be reversed. Next, it determines the future cash flow of the company. Whatever the investment decision that you are taking now, that will determine the future of your company. Let's say you know that electronic vehicles are now taking charge in the automobile industry. Had you invested 5 years ago in the EV infrastructure, today you will be gaining a lot of returns. Same time, had you invested 5 years ago in the petrol infrastructure, today you would be making a huge losses. So the kind of investment decision that you're taking, it determines the future of the company and it determines the vision of the company. So that is the reason investment decisions are very important. Are you understanding this? Sir, it involves huge cost, so it is important. It is an irreversible decision, so it is very important. It determines the future cash flows of the company. It determines the future of the company basically. Wrong investment decision, company nadathirilla vandu nikkum. The company will be going for a toss. Next, it involves risk, definitely. Because decisions are future oriented, future is always risky. Future is always uncertain, risky. Correct. So because it involves risk, it is important. And next, shutdown cost is high. Once a decision is taken, and now if you plan to shut down, it means that it involves huge cost. It doesn't mean, okay, any business doesn't mean shut down means shutter down business, business close. No, you have to sell off, you have to, it is a huge cost. There is a huge cost. Machine cannot be kept idle. If the machine is kept idle, you have to do maintenance. All these things are there. Shutdown cost is very high. Similarly, your car you purchased, after 1 month you feel that no, I should have purchased that car. I want to sell this car off. You will get only 50% of the amount. You have purchased the car for 20 lakh rupees, it will be sold only for 10 lakh to 12 lakh rupees. Or if you purchased a vehicle for 1 lakh rupees and after 1 year you want to sell, it will only be sold for 60,000 or 50,000 rupees. Even only 50% you will get, or less than 50% based on the condition. So that 50% is a loss to you. Shutdown cost is very high. You cannot tell, sir, life of the machine is this much, your depreciable value is this much. No, practically the shutdown cost is very high. So that is the reason it is an important decision. Sir, how should I take investment decisions? I have to take investment decision using evaluation techniques. I have to evaluate using some techniques. So there are some techniques in financial management, other core concepts. There are some techniques in financial management, and those techniques are payback period. Sir, what is payback period? When will I get my money back? Today I am investing 1 lakh rupees. That is giving me 20,000 for the next 10 years. So in 5 years I am getting my money back. So 5 years is my payback period. Accounting rate of return is nothing but the net profit percentage, okay, or the operating profit percentage. So basically accounting rate of return, average return divided by average investment. Sir, payback reciprocal, average, it will just give me an average return. 5 years na 1 divided by 5, 50%, 1 divided by payback period. Payback reciprocal is nothing but 1 divided by payback period. All these things, all these problems I'm going to cover. Discounted payback period. In payback period, time value of money is not considered. So injecting time value of money, you will get discounted payback period. Okay, so payback for discounted cash flows. Net present value, all the cash inflows and cash outflows are considered. So discounted cash inflows minus discounted cash outflows, net present value. Sir, we are not understanding, you're going very speed, don't worry. Everything will be explained conceptually one by one with the problems. I'm just discussing profitability index. Okay, again, that is an index number of the discounted, a ratio that tells me for 1 rupee invested how much is the inflow that I'm getting. Internal rate of return, the rate at which the discounted cash inflows equals discounted cash outflows. Modified internal rate of return, correct? The rate at which the discounted cash inflow equal discounted cash outflow considering the reinvestment rate assumption. Then modified NPV, again NPV considering the reinvestment rate assumption, and adjusted NPV. This is nothing but the NPV adding the present value of the tax sheet on interest and flotation costs. So the adjusted NPV. All these are the concepts that we're going to see in investment decisions. And advanced problems like if there is a conflict between NPV and IRR, what you should do. So conflict can be arising because of 3. Conflict can be arising because of unequal cash flows, because of unequal life, because of size of the cash flows, correct? Now unequal cash flows, now we have to do unequal life, now we have to do. So unequal life, you are having again 2 methods, replacement chain method, you are having equal and annualized approach. Okay, EAC, annualized NPV, that is one approach. Replacement chain method is one approach. And then if you're having different flow of cash flows, it means you have to use modified internal rate of return. correct, and you have a relative NPV method. So all these methods are there that you're going to study. If there is a conflict between NPV and IRR, you're also going to see capital rationing decisions. In capital rationing decisions, if the projects are exclusive, how you have to do. If the projects are not exclusive, how you have to do. Sir, all these words are alien to me. You would have studied everything at an inter level, that we are going to refresh it again, everything. Okay, everything that we are going to refresh it again and again. This is the first class, so I am making you a little bit more, so much is there to study. Yes, so much is there to study. Okay, financial management, finance is like an ocean, where what you are studying is just a droplet of the ocean. And if you see, there is a lot more to study, and you are going to thoroughly enjoy all these sessions. Each and every session is very properly curated in a manner that you also understand, also apply practically, and also apply in the examination by writing the questions. Now, that is how each and every session I have curated. The concept book is also ready that you are going to receive, and in that concept book, you're going to, that will be like a handbook for the classroom. Sir, what are the steps in capital budgeting? You have to identify one investment opportunity. You have to estimate the cash flows. Very important. This is something that you studied at Intel. I have to estimate all the cash flows. Then I have to assess the risk and time value of money. Basically nothing but discounting. Then I have to apply the evaluation techniques. Any one technique I will apply. Then based on this technique, I will make a decision. Then after making a decision, I will evaluate and then I will control. That's the last step. Correct? Correct? Are you all with me? Sir, the first step, identification of investment opportunity. It is nothing but I have to generate an investment which is ideal and that align with my organization strategic. It doesn't mean a sari company wants to open a liquor shop. Correct? Because that is not my organization goal. That is not my objective. Correct? So, any proposal that is coming in front of you, not marriage proposal, I am talking about investment proposals. So, any investment proposal that is coming to you, that should be ideal for the company. That should align with the strategic goals and objectives. For example, I want to invest in some new plant, sir. Sir, I want to invest in new product line, sir. Sir, I want to invest in new geography, sir. Sir, I want to expand my business. Sir, I want to do this cost saving automation. All these are investment proposals. So, first step is identify the investment proposal. Second, estimate all the cash flows for that investment proposals. Third one, discount that. Evaluate what are the risk. Evaluate the risk. Evaluate and the risk and time value of money. Then the next step is use the criteria, use the evaluation techniques, and based on those evaluation techniques, based on the decision rule, you're going to either accept the proposal or you're going to reject the proposal. Again, not a marriage proposal, okay? Investment proposal. Let us say I am a sari manufacturing business. I have a capacity of 1 lakh saris daily. Now I want to invest in my expansion project and I have to purchase a 10 crore machine, and that will increase my 1 lakh production to 2 lakh production. Now what I have to do? I have to estimate the cash flows. What is the cost of that machine? 10 crores. If I'm investing in that machine, what are the expenses that I will be estimating for the next 10 years? And what are the, because of this machine, what is my profit? What is my cash flows that I will be generating from that machine for the next 10 years? What is the depreciation tax? Everything you will calculate something called as cash flows. And at the end of the 10th year, what will the terminal cash flow? So basically you have to estimate the cash flows. You have to have 3 types of cash flow. So based on the life of the asset, every investment or every project is having some life. Correct? Every investment will have some price, life. If I'm purchasing a machine, the life of the machine is 10 years. So the machine is used for 10 years for that purpose. So I will estimate cash flows only for 10 years. Okay, I will not estimate perpetually. Don't worry. Perpetual estimation is not even possible practically. Are you all with me? Business is having perpetual life. This is not business valuation. This is proposal valuation. This is investment evaluation. Sir, first is initial cash flows. Second is annual cash flows or subsequent cash flows. And the third one is terminal cash flows. So based on these 3 cash flows, I will apply my evaluation techniques, and based on these criteria, I am going to take the decisions. Now, while estimation, you should be knowing that cash flows are superior than accounting profit. You will not consider profits. Why, sir? Because profit include non-cash expenditures. Profit includes, depreciation, which is not even a cash flow. So all these things should be removed, and then you have to do some adjustments to convert the accounting profit into cash flows, and that cash flows you have to estimate for all the years, and based on that you have to calculate either NPV or IRR or payback or whatever is asked for, and based on that you have to take the decisions. Are you all with me? I'm just creating a base for investment decisions. Okay, we are creating a base for investment decision. Based on this base, rhyming, so based on this base we are going to buckle more concepts, and from there you are going to be using those, and then I will be connecting those with the other set of chapters also. That is how our class is going to be. Investment decision is a very good chapter. Why? Because in this chapter very interesting problems are asked, but those problems can be solved very easily. How, sir? Because those problems, I will be telling you a structure in which we are going to solve the problem. I am going to give an approach of how to solve this discounted cash flow technique problem, how to have project evaluation problem, how to have NPV IRR things. Okay, I will give you a structure. So basically that is a value addition that you're going to get. I will give you a structure of how to solve the problem. Formats you say, structure you say, understanding you say, correct? And all the problems will be having in that structure. In your study material there is no set structure for problems. One problem is solved in one way, second problem is solved in another way, third problem is solved in a different way. You will not even be understanding a proper structure or scheme of the problem. So that will be the value addition, where I will be giving you a proper structure of how you have to read the problem, how you have to solve the problem, so that we are going to solve a lot of problems. Sir, in this batch, we are going to solve a lot of problems. First, concept discussion. Concept understanding. My introduction itself will be very large because of base. Then you are going to solve a lot of problems, and I am going to solve at least, let me just tell you, for investment decision we are going to solve at least 20 questions. Here we are going to solve at least 50 questions. Here again 20 questions. Here again 25-30 questions. So basically 200 plus questions we are going to solve in the classroom itself. And 100 plus questions I am going to give you as homework, and meet the questions you have to put it as a revision. So you will be having a question bank with you, where all the questions will be covered A to Z in a very good manner, where you will be able to solve it in a in a structured manner. Your answer will not be in a haphazard manner like your study material. Your answer will be in a very much structured manner, in a very structured approach, so that you are going to get full marks in the examination. What is your target again? 80 plus is your target. Are you all with me? So the first chapter is investment decisions. Okay, so in the next classes, in the next coming classes, we are going to start off with directly the payback period, directly capital budgeting techniques. We are directly going to jump into decision making, investment decisions. Are you all with me? Inter level, I will not directly jump into decision making. First, I will teach you analysis, leverage analysis, ratio analysis, comparative analysis. All these analysis I am going to teach you. Only then, time value of money I will teach, and then only I will jump into decision making. At a final level, I understand that you know how to analyze an income statement. You know how an income statement looks like. You know how a balance sheet looks like. Okay. And all these things we are going to build the discussion further at the final level. That is where you sort transition from intermediate to final level. Your level of maturity is differing here. Are you all with me, my dear Challakutis? Okay. So I don't want to torture you, okay, with lot of concepts today itself in one video itself. because SFM is going to be a exciting roller coaster ride for you. So we all will be enjoying all the classes to the core, you and me. So see you all in the other side when the batch starts, and we are going to start off with the concepts, and it will be in a regular basis. What are the timings? Again, 6:30 to 8:30 are the timings. Sometimes I may extend to 9 also, okay? And then it will be continuing from there on. So if you want to register, you can register it, in the coming days. So there is some offer going on now, so you can call and take all the details. So if you register now, you will some kind of offer is there. If not, you just put it in the comment section. I will talk, and slowly you're going to be exam ready. This is a video where I am giving an entire overview of the subject with the start of investment decision concept. So see you all in the other side. All the very best. Thank you very much. This was Thofik Tufel signing off for now. Okay. And last but not the least, tell me in the comment section about how was the class, how you felt about it, and what are all more things that you want from me. See, I am a person who listens to my students. So what are all the things that you want from me? Put in the comment section. I will be incorporating that, okay, in the coming classes. Number 2, you see my other video, portfolio management, security analysis. Okay, just over a glance, that investment decisions, I solved some problems. Actually, you studied inter, right? So final also it becomes very easy. Investment decision, you see that video where I've solved a lot of problems, step by step approach. You will be getting some clarity, and then you will be having some idea of how the classes will be ahead. This is for new students, I'm telling. People who know me knows me, but people who don't know me, I'm telling for them that you can see those videos. Okay, so thank you very much. See you all in the other side. Thank you very much. This was Thofik Tufel signing off for now. Thank you.